Welcome to Talk Tickers. We're here to give you the crucial insights from the latest earnings calls, nice and fast. Today, we're jumping right into Polestar's first quarter of 2025, and the headline seems pretty positive.
Yeah, definitely. Strong growth pretty much across the board.
Yeah.
We saw retail sales volume jump significantly.
How much are we talking?
About 76% compared to the same time last year. And revenue growth was even stronger, actually.
Okay.
Up 84%. And that seems tied to selling more of those, higher priced Polestar 3 and 4 models.
Right, the newer SUVs.
Exactly. But maybe the biggest news, financially speaking, was the gross margin.
Yes. Tell me about that.
Well, they swung to a positive 7% gross margin. That's a huge improvement, like 15 percentage points year over year.
Wow, okay. That's significant.
It really is. And they also managed to improve their net loss situation, and adjusted EBITDA looked better too. So yeah, definite momentum.
Okay, so the big picture looks promising. Let's dig into what's actually driving all this. Management seems to be making a pretty big shift in how they sell cars.
That's right. They're really leaning into a dealership-based model now, expanding that network quite a bit.
Alongside the online sales, though, right? They're not ditching that.
No, keeping the online channel too. It's more of a hybrid approach. The dealer network grew, I think, 33% year over year outside of China.
And they have bigger plans for that.
Oh, yeah. The target is 75% growth in that dealer network by 2026. It's ambitious.
So reaching more traditional buyers who want that, dealership experience, test drives, service.
Exactly. It's about reaching a broader market, providing that more conventional car buying journey for people who want it.
Makes sense. And what about the cars themselves? Anything new attracting these buyers?
Well, they updated Polestar 2, the model year 26, got some tech upgrades. There's a new Qualcomm Snapdragon processor, a Bowers and Wilkins sound system option.
High-end stuff.
Yeah, they keep pushing out those over-the-air updates too, which is smart.
And the newer models, the 3 and 4.
Polestar 3 did really well on safety tests, got that 5-star Euro NCAP rating, and actually set a record score for child occupant protection.
That's a big selling point for an SUV.
Huge. And the Polestar 4 is clearly gaining steam. It just won Car of the Year in South Korea.
Okay, that's a significant market. So good momentum on the product side, too.
Definitely seems like it. Those kinds of awards and safety ratings really build brand credibility.
Now, you mentioned manufacturing earlier. They're doing something interesting there, aren't they? Starting production in South Korea?
Yeah, that's for the Polestar 4, expected to start in the second half of this year. It fits into what they call their asset-light strategy.
Meaning they don't build all their own factories.
Right. They leverage existing production facilities they're already building in China and in the U.S. with Volvo. And they have plans for Europe eventually for the Polestar 7.
Got it. Less capital intensive, presumably.
That's the idea. And speaking of future models, the Polestar 5 is coming soon too.
What's that one?
It's their 4-door Grand Tour. Expected to start sales later this year. And they're positioning it as a real performance leader in its segment.
Okay, so moving up market into performance EVs. Interesting move.
It is. It could definitely lift the brand's image, but it also means competing in a tougher space.
All right, let's shift gears a bit and talk about the dollars and cents. Cost control seems to be a big theme.
Absolutely. They're actively working on reducing their cost base, finding efficiencies everywhere. That includes R&D, where they expect savings from using those shared group vehicle architectures.
Makes sense. And headcount.
Yeah, significant reductions there. They mentioned a 25% cut from 2023 levels by the end of this year, 2024, with efforts ongoing, so getting leaner.
Okay. And inventory management. I heard that was a focus too.
It was. They acknowledged having high inventory levels at the end of 2024, so they're working on optimizing that to improve working capital and cash flow.
Right, freeing up cash. Now, interestingly, they pulled their financial guidance for 2025.
Yeah, they did. They cited all the global economic and geopolitical uncertainty. Things like potential tariffs, change in regulations. It's a volatile world out there.
Understandable, but they kept the longer-term target.
They did. They reaffirmed that 35% annual growth target they're aiming for between 2025 and 2027. So short-term caution, but still long-term confidence, it seems.
And how's their cash position looking?
At the end of Q1, they had about $732 million in cash, pretty much the same as the end of 2024.
Okay. And they secured some extra funding.
Right. They got access to up to $450 million in term loan facilities and renewed a big $480 million green trade finance facility. So they've shored up liquidity a bit.
Good cushion to have. Let's talk tariffs. That's a big cloud over the auto industry, especially EVs.
For sure. Europe is their main market, about 75% of their business, which helps. And having U.S. production in South Carolina via Volvo is also a plus.
Mitigate some risk, but not all.
Exactly.
Yeah.
Tariffs on imported parts are still a factor, and the whole trade situation is just fluid. They acknowledge they need to keep finding cost savings because of it.
But the U.S. is still a growth priority despite these headwinds.
Seems so. They called it an important growth area, but yeah, the cost complexities are definitely there.
Okay, going back to that gross margin improvement, 7%, you said it was mainly product mix.
Yeah, largely. Selling more of the higher-priced Polestar 3 and 4 compared to Q1 last year, which was mostly the Polestar 2, that naturally lifts the average margin.
Makes sense, but pricing pressure offsets some of it.
That's what they indicated. It's a competitive market, so they likely had to offer some incentives or adjust pricing, which ate into the margin gain a bit. Still, a net positive shift.
And their manufacturing partnerships with Volvo and Geely, how flexible are those?
They described them as flexible, didn't give specific volumes, but said discussions are ongoing based on market conditions. They seem confident they have enough capacity right now, particularly in the U.S.
So the overall strategy looking forward is what? Lean heavily on Europe.
Pretty much. Leverage their strengths there, the brand, the growing dealer network. Treat the U.S. as a growth market, but be very mindful of the costs, especially around tariffs.
And keep hammering on volume, margins, and costs.
That's the trifecta. Increase sales, improve profitability per car, and keep expenses tight. It's the classic path they need to follow.
Did they say anything about CO2 credit sales? That's usually a nice little revenue stream for EV makers.
They didn't give the exact Q1 number, but they did say they're still confident about hitting a, quote, $3-digit million US target for the full year 2025 from those credits.
Okay, so still expecting a decent contribution there. Now, what about liquidity and future funding? They mentioned cash burn.
Yeah, they were quite upfront that the previous cash burn rate wasn't sustainable. The plan to reduce it involves, well, everything we've discussed. Revenue growth, better margins, cost cuts, and tighter working capital management.
And their debt levels, are they close to any limits?
They mentioned having $4.8 billion in debt against a covenant of $5.5 billion. So there's some room, but not infinite.
Which means they might need more cash.
They acknowledge that. They're actively looking at alternative financing, could be new equity, working more closely with Geely, or bringing in other investors. It's on the table.
Makes sense. Did they give a breakdown of the model mix in Q1? You mentioned the 3 and 4 were driving revenue.
They did. Polestar 2 was about 31% of volume. Polestar 3 was around 19-20%. And the Polestar 4 made up the biggest chunk, 49%.
Wow, nearly half from the Polestar 4 already.
Yeah, really shows how important that SUV is becoming to their volumes and likely their margins. And they want to optimize that mix further.
Okay, one last thing. That looming U.S. ban on certain China-connected tech in cars starting model year 2027. How's Polestar thinking about that?
They stated they're actively working on solutions to make sure they comply. They recognize the U.S. is crucial, so they know they need to figure this out to stay in that market.
A lot to navigate there. Okay, let's pivot. Time for our This Is Not Financial Advice segment. Given everything we've heard, strong European growth, dealer expansion, but tariff and regulatory headwinds, especially maybe in the U.S., what's an outrageous but plausible idea?
All right, here's one for you to chew on. How about this? Consider looking closely at companies that are leaders in advanced over-the-air or OTA. Update technology for vehicles, specifically those with a strong foothold in Europe.
Okay. Why OTA tech?
Well, as Polestar and other EV makers lean more heavily on software updates for new features, performance tweaks, fixes the underlying tech for delivering those updates securely and reliably becomes critical.
So it's like a picks and shovels play on the software-defined vehicle trend.
Kind of, yeah. Especially in Europe, where Polestar is seeing strong growth. Demand for robust OTA solutions could rise significantly. It's a way to potentially play that European EV growth story without betting directly on one manufacturer and maybe sidestepping some of the direct tariff or U.S. regulatory risks.
Interesting angle, focusing on the enabling technology. Outrageous but plausible.
Exactly. Food for thought.
All right, that's our rapid-fire rundown of Polestar's latest earnings call. Hopefully, pulled out the key bits to keep you informed. Lots to think about there. What really stands out to you? And what might it mean for the bigger EV picture? Definitely worth doing your own digging.
Yeah, and maybe a final thought to leave you with. We're seeing this constant push and pull, right?
Yeah.
Traditional automakers jumping into EVs, geopolitical factors messing with supply chains, regulations changing.
It's complex.
Super complex.
Yeah.
So the ability of companies like Polestar, even with their asset-light model and regional focus, to just adapt quickly, to navigate costs, regulations, technology shifts, that's going to be absolutely critical for who succeeds long-term. How will their specific strategy hold up? That's the big question.
Indeed it is. Join us next time on Talk Tickers for another deep dive into the earnings shaping the markets. And just a reminder, this was all for informational purposes.
Definitely not financial advice. Do your own research.